Karan, a very good morning. A whole host of news and insights and information since we last spoke nearly, a little over 24 hours ago. What is clear is that the deal is dead in the water and there is a huge legal battle going ahead. What is the kind of cut you expect to the stock today?
So I think in terms of a potential downside, we have a target price of 170, which is about 26% lower as compared to the current price. I think the bigger delta here is the cut on the valuation multiple. Sony as a company was supposed to also get cash infusion in the merged company. Secondly, there was a very big respite to the valuation multiple because both the companies could have worked for multiple synergies. Both companies could have worked for gaining potential market share in the M&A ecosystem, which is already heavily consolidated. So basis that, we were building a very good scenario, for Sony Z Mershco, but because the deal not going through, I think Z on standalone basis will struggle in the M&A market. And so it with Sony as well, right? I mean, both companies are going to see negative impact of this merger. And why Z more is because, frankly, they've also kind of entered into the sports contract with Disney for TV rights. Now, it depends in terms of whether they honor it or not. That's still not known. But if at all they honor that, it could be even tougher for Z because, even that segment could see hefty losses because of, sports being available free on OTT, if at all going ahead as well. And also there are multiple legal proceedings. The legal proceeding with Sony, which could happen, legal proceeding with the current creditors, right from Axis Finance to IDBI from the SL side. So I think it's going to be tough for Z, and I think valuation multiples for the core broadcasting will not be able to move beyond 10 times. You might find some kind of a strategic partner if at all there is someone which could lead to some kind of respite for valuation multiples. But multiples will never go to the band of 18-20 times forward P, what we had assumed. In the case of Z Sony merger, because a lot more was being bought into the company apart from, just a partner. It was a lot of synergies, a lot of technological expertise, and the MNC backing. And I don't think there are too many options right now in the M&A industry, right? I mean, Disney already is in talks with RIL. So I think apart from Sony, they did not have any large company to, kind of get talks with. So I think it's going to be a tough time, for Z in the middle of it, all these things.
In fact, the stock already nearly 10% down in pre-open, and we're likely to see up to a 25% cut as per Karan Taurani of Elara. Karan, the fact is that this company still has about a 16% market share. And like you're saying that they are going to fight back with a strong legal battle. Do you see any kind of a bottom for this company, or is it something that you would write off any kind of investment list completely?
I think yes. So tactically, if you look at the bottom, if they do not honor the Disney contract, the bottom could be around 170. But if at all they go ahead and honor the Disney contract, the losses because of sports will increase, and that will impose more pressure on profitability. And in that case, the bottom could even be 130. Now, the only point is that what are the triggers for the stock? What will lead to the surprise in terms of earnings or potential market share? Obviously, the business performance, right? I mean, but the business performance has been quite volatile, and it's not about blaming Z over here. Business performance is also a matter of the market, right? So market dynamics have not been favorable. Linear TV is not growing. Digital is growing, but there's a struggle for profitability. Z5, the OTT platform, is also making hefty losses. So there are not much of triggers here to play even at that bottom of 130, 160, or 170, which is there for the stock to move to 250, unless there is some sort of a strategic partner who comes in and there is a minor respite to valuation multiples, basis that. So if there is some strategic partner, yes, potentially the stock can move again back to a 250. But going back to 350, 400 is highly unlikely, as I told you, because what Sony was getting on the table, no other strategic partner will be able to get that kind of thing.
Okay. Karan, appreciate that clarity. Thanks so much for taking the time out and being with us today and giving us those thoughts.